Japanese candlestick charts are a popular tool used by traders to analyze price movements in the financial markets. Bearish candlestick patterns are a set of patterns that signal a potential reversal in a bullish trend or a continuation of a bearish trend. These patterns can be used by traders to make informed decisions about when to enter or exit a trade. Here are the only ones you can memorize. Please, remember that they occur at the top of an uptrend. Tweezer Tops, 2 candlesticks with matching highs, indicating potential reversal. 3 red crows, 3 consecutive red candles with lower highs and lower lows, signaling a bearish trend. Bearish engulfing, a larger bearish candle that engulfs the previous smaller bullish candle, suggesting a bearish reversal. Gravestone doji, a doji candlestick with a long upper shadow, indicating a potential reversal from bullish to bearish. Evening star, a bearish reversal pattern consisting of a large bullish candle, a small indecisive candle, and a large bearish candle. Hanging man, a bearish reversal pattern that resembles an inverted hammer, indicating a potential reversal from bullish to bearish. Thanks for watching.